From smartphones to shampoos, everything we buy drives India's consumption engine. And LIC MF Consumption Fund aims to tap into that everyday spending power. But does investing in consumption means guaranteed returns? Let us find out through an in-depth analysis in this video. Hi there, welcome back to holisticinvestment.in, where we help individual investors like you to make the right financial and investment decision to reach your financial goals in a more faster and smarter way. Now, before analyzing this fund, let us first understand a few basic details about it. So this fund focuses on companies that benefit from India's growing consumer demand across sectors like FMCG, retail, automobiles, consumer durables, and lifestyle products. So it's a thematic equity fund that rides on India's rising income and urbanization story. So as an NFO, it opens on 31st October 2025 and closes on 14th November 2025. And some of the key features of the fund are: this is an open-ended fund type which belongs to the category of equity thematic consumption, and it has Nifty India Consumption TRI as its benchmark index, and for exit load for units in excess of 12% of investment, 1% will be charged if redeemed within 90 days. And there is no entry load, but the minimum investment amount required for this fund is 5,000 rupees. And the fund managers for this fund are Mr. Sumit Bhatnagar, Mr. Karan Doshi, and according to the riskometer, the risk involved in this fund is also very high. So the primary investment objective of this fund is that it seeks to generate long-term capital appreciation by investing predominantly in equity and equity-related instruments of companies benefiting from consumption theme. So now, as we have a basic idea about this fund, let us move on to the analysis part of the video, where we are going to take a look at the pros and cons of investing in this fund. So let us start with the advantages. Number one, India's consumption story is backed by population growth, higher income, and lifestyle upgrade. So all pointing towards steady long-term demand. And number two, the fund spreads its investment across multiple sectors like FMCG, autos, and retail, reducing dependence on any single industry. And number three, with India moving from a low income to a middle income economy, consumption is expected to be a consistent growth driver. And number four, high quality consumer brands often enjoy pricing power and steady earnings growth, enabling long-term wealth creation. So these are some of the advantages, but there are cons as well. Like the disadvantages are: number one, being a theme-based fund, performance depends heavily on the consumption sector strength. So if it slows down, returns may take a hit. Number two, consumption stocks can fluctuate with inflation, interest rate changes, and market sentiment. And number three, popular consumer stocks often trade at high valuations, which can limit upside if earnings don't grow fast enough. And number four, since it focuses on one theme, it's better used as a supporting or satellite investment, not your main portfolio. So these are some of the drawbacks that you need to keep in your mind before deciding to invest in this fund. So what is the final takeaway then? Is investing in the LIC MF Consumption Fund worth it or not? So in short, this fund lets you invest in India's growing appetite for goods and services, a strong story for the long run. But remember, it is a thematic fund, so allocate only a small portion and stay invested with patience to truly benefit from the consumption boom. But our personal recommendation is that, as it is a thematic NFO, if you're a first-time investor or even if you're a conservative investor not willing to take a lot of risk, you should definitely avoid investing in this fund, because there are other similar existing thematic funds with track record of at least 7 to 10 years where you would be able to analyze and take a calculated risk. But here, investing in an NFO, and especially a thematic one, is like taking a blind risk. And if you're also looking for funds to add to your core portfolio and you do not know when to enter and exit from a thematic fund, it's better to avoid investing in this fund, because even for a seasoned investor, it is hard to time or predict when to enter and exit from a thematic fund. So if you add it to your core portfolio and this fund underperforms, it will definitely impact the overall return in your portfolio. But if you still feel like you might benefit from some professional guidance, you can definitely consult with a professional financial planner who will look into the fund's suitability of investment objective, risk profile, overlap ratio, and allocation, and see whether that fits with your risk tolerance, your investment portfolio, financial goals, and time horizon, and strategically guide you towards better outcomes.
And if you want to gain more professional guidance through a professional financial planner, you can choose to book a one-on-one complimentary consultation with one of our professional financial planner through the link in the description. Also, if you want to gain more investment and financial insights through the leading experts in the finance industry, we also conduct regularly free live webinars through which you can register and gain these insights. The link is in the description. Also, if you like this video, definitely hit like and subscribe to YouTube channel so we can come up with more such financially beneficial content for you. Thank you for watching.